On Wednesday, Trump announced a lot of tariffs. So why were the markets upset? I think the markets were expecting a much bigger tariff announcement. People really have to work two jobs now to cover their expenses. How is that bullish? We predicted this fall. Hello, boys and girls. I'm Paris, the options guy, and welcome back to the Novius Trading Podcast. And yes, I know I'm back after a while, and I also haven't been posting any content lately. And yeah, I took a little bit of a break because my creativity just went down the drain, you could say. Anyways, what are we gonna talk in this week? Because a lot of things have happened in the market, and you must have seen, right? Trump announcing tariffs, the markets like going to the depths of hell and, just closing their Dow Jones is down more than 10% this week. So, what are we going to talk about? What is going to happen in the future over here, right? And there are many, many more things that I'm going to talk about. Obviously, if you must have been seeing my videos lately, you would have already known that something like this was coming. But anyways, I will not, do a lot of flattery for myself over here. I will start the video and I will start this episode, and we will talk about all of these things in a little bit of detail and what's also coming for the markets next, especially after the crash that we've seen in the US markets in this week's end, in the second half of this week. But yes, without any further delay, let's just start with the episode. So talking about, first of all, why did the markets crash and what happened in the previous week because of which the markets crashed. So on Wednesday, Trump announced a lot of tariffs. He was going to announce a big tariff plan on Wednesday. The Make America Wealthy Again was the name of the event in which he was going to announce, and he did announce big tariffs. So what tariffs did he announce? Now, very simply, he announced tariffs on almost every country, every big country or every material country in this world. And for a simple, to simplify all of this, he first of all announced a base rate of 10%. So anything that you export to the US, you will have to pay 10% tariff on it, okay? But aside from that, there were higher rates also for countries, right? And those rates were determined by half of what the countries charge US, right? So let's talk about India. So India charges 52% tariff on US imports, right? So anything that comes from US, there is a 52% tariff on that. So that's why the half of 52% is 26%, and that is what the United States has charged us on Indian exports, right? So this is basically the higher level of tariff rates that has been charged on countries, but a base rate of 10% has been charged on all the US imports over here. Now, after this, Argentina is already in the talks, and I think Vietnam is also already in the talks to become a tariff-free country, right? So again, it is not completely solidified. The deal hasn't been solidified, or the deal hasn't been signed or anything. They are in the talks of maybe Argentina might do something for the US, because of which they are going to get zero tariffs. So anyways, after that, so why were the markets upset, right? Because if you see, and this was announced on Wednesday after the US markets closed, okay? Just after the US markets closed, this was announced, right? So this event was just after the US markets closed. So you must have seen how on Thursday, the US markets were down very, very heavily. So why were the markets upset? So I think the markets were upset because first of all, if you think about it, I think the markets were expecting a much bigger tariff announcement, right? So that the US companies, all of the companies in the US, they will have a better upper hand, but they didn't get so much. Now, if you must have seen, now if you follow currencies, right, if you follow how the GBP moves, euro moves, and all of that stuff, if you must have followed currencies, you must have noticed something. And this is what I noticed before the announcement in the last few days. The price action was indicating that the US dollar was going to weaken, okay? And like someone was taking some bets against the US dollar. That was the price action that was forming up, and that is exactly what happened, right? The tariffs that Trump has announced, those were actually lesser than expected. If you see, right, Trump was actually going to announce much higher tariffs, and also he did not announce tariffs on Canada and Mexico. So these extra tariffs will not apply to Canada and Mexico also. So in that sense, the US stock market was upset because now they aren't expecting such a big edge against their competitors, right? And even if you think about it, um, that tariffs in general itself are very bearish, right? Because they will kill your trade deals, they will kill your trades with other countries, right? Or at least, if not kill, they will at least put a dent in your trades with other countries, because all of a sudden things aren't becoming as lucrative as they were, right? And so because of that, US stocks plunged a lot on Thursday. And then why did the US stocks continue their plunge on Friday? Now, there are two reasons to it, but I'm going to get to that in just a second. But yes, on Thursday, then China announced that it will put an additional 34% tariff on US goods. Actually, I think this wasn't on Thursday, this was on Friday, early in the morning, like before the US market opened. China has put an additional 34% tariffs on US goods. So basically, US put 34% tariffs on Wednesday on China, and China decided, you know what, I'll also put 34%. And so this actually was a bad news, right? Because because China is one of the biggest, you can say, consumers. Now, you might not think so. You might think that China is a producer, but still, if you think about it, China is a very, very big economy. And if it is putting 34% tariffs on US, it is really telling you that things are getting serious. This is not something that is a short-term thing. Things are really getting serious. And because of that, the stock market sell-off accelerated in the US, right? And because of that, there was a sort of like a domino effect where if you look at the US markets, if you would be following the US markets for a long time, if you would be understanding what the US stock market is made up of, you would know that the US stock market, a lot of players in the US stock market, I'm talking about institutional players, they are carrying huge amounts of leverage, right? And they haven't been so, you can say, worried about their positions, because since the last, you can say, like, aside from the August 5th fall last year in 2024, aside from that, things have been smooth sailing and markets were continuously going up and up and up, right? And all of a sudden, when a lot of volatility comes in, a lot of these players who are leveraged, like very much, right, these guys are now forced to exit their position. They are forced to liquidate their positions, because of it there's this domino effect where all of a sudden, if one guy sells, the other guy is also facing even more loss, because there's one guy who is selling these stocks, right? Now, because of that, the stock value is going down very fast, because of which the guy who is maybe not as leveraged but still has those positions, long position in the others, in that stock, now the other guy is also facing pressure to exit that stock, and that guy also starts to exit, because of which the stock sell-off accelerates. And that is, I think, what we saw on Friday. And on Friday also, there was one more thing. US unemployment rate came out, and it was at 4.2%. So unemployment is continuing to tick up, and I think going forward also we will continue to see this trend where unemployment continues to move up, and we will not, I don't think, see a slowdown in unemployment sell-off. Now, I'm going to tell you one thing, why unemployment is not moving up. And the reason for that is that the BLS, right, the Bureau of Labor Statistics, which makes these data points, or collects these data points, or you can say like maintains these data points, that considers even like a part-time job as a guy being employed. Maybe he might not be employed, but the Bureau of Labor Statistics considers that as being employed. And because of that, you are not seeing such a big jump, because people in America are working part-time jobs at an all-time high level, right? And I don't have the exact data point, but I read this on Twitter, and I saw this data point where you will see that part-time jobs for people are now at an all-time high. People are working double jobs, right? Their main job and then a part-time job to cover their expenses. And because of that, when even if you look at the non-farm payroll data, the jobs data in the US, you will see that jobs are being added. But what type of jobs are being added? So this is where a lot of part-time jobs are being added, and people think that this is bullish. But how is this bullish? Tell me. If people are really, people really have to work two jobs now to cover their expenses, how is that bullish? Really, I mean, that's very bearish in my opinion. And I think that's why I said that I have been saying since 2024 itself that go and sell your stocks, don't hold your stocks. And if you must have done that, if you would have read any of my articles in 2024, you would know that I have been advocating for not holding your stocks, right? I have been saying that times are coming, bad times are coming. And if you must have seen just the video that I posted on 20th Feb, the day from where the stock market started falling, and the title of the video was something bad is coming and you're not ready for it. And since then stock market is completely falling, right? The US markets are completely falling. So we predicted this fall. Okay, if you think about it, we predicted this fall, and people don't believe you until they see that. And as I said, that the market is telling us that something bad is going to come. Get the hell out. Why are you still here? Something bad is going to come. So you just have to listen to the market. You should just know how to listen to the market. That is very important. And I think most of the people don't do that. They are too delusional to think about that. And they're too delusional to think that something bad can happen in the market. But anyways, those things are aside, I hope you guys now will pay a little more attention to my videos. But anyways, thank you very much still, for all the support that I've been getting on my content. And I hope I can bring even better content for you guys so that you guys can benefit even more. But anyways, there was one more thing that I noticed, and that is that Zomato fired 500 people over growth slowdown and AI automation. Now, if you must have listened, watched my video about the Indian consumption is dying, the Indian consumption story is dying or is about to collapse, you must have seen that in that video I talked about how AI is going to be very detrimental for the Indian job market, and we are already starting to see that with the big companies. And I think this is only going to accelerate from here. I think what will happen is that a lot of entry level and mid level jobs will get eliminated in India, right? And that's the problem, right? Because most of the jobs in India are entry and mid level jobs. They are not high level jobs. Yes, there are a lot of high level jobs too, but the majority of jobs in India are entry and mid level jobs, not high level jobs. And that is a problem. Zomato is doing it right now with 500 people. I cannot see a way in which this will not accelerate from here. But yeah, those were the things that happened in the previous week. Not such a great week if you would have been invested in stocks, and it won't be a great week going forward too. Let me tell you that upfront. But anyways, we'll talk about that in the market analysis part of the video. Now talking about what is going to happen in the next week. If you see next week on Wednesday, we have RBI's interest rate decision, and it looks like RBI is going to cut rates by 25 basis points this time around. If you see, inflation numbers were good last time that they came out. I think they were below the RBI's tolerance band. So I think RBI would not hesitate to cut interest rates by 25 basis points over here. I think it would be very interesting to see what RBI has to say about, first of all, the not the interest rates, I'm sorry, the currency rates, right? So the exchange rate of USD INR and also the global volatility overall. I think that would be very interesting. So look out for what I forgot the name, Mr. Sanjay Malhotra has to say about all of those things. I think 25 basis point cut looks like the right thing to do for RBI over here. But yes, on Thursday, then we have the US CPI data, and year over year, it is expected that US CPI will rise by 2.6%. Previously, the US CPI was 2.8%. So last month, US CPI was 2.8%. Now people are expecting 2.6%. So the problem will be, very big problem will be if US CPI comes out higher, because now everybody is expecting a recession, first of all, because of the tariffs over here, right? So everybody is expecting that if tariffs go up, if tariffs continue to stay high, or tariffs continue to stay over here, tariffs are here for the long term, that will impact a lot of economic activity, and because of that you will see a slowdown and eventually a recession. Now if that happens, what will happen is that, and if that happens and then the US CPI also comes out higher, then the problem will be that the Fed, if it is seeing that inflation is not going down as well as the economy is going down, right, that will mean that we are in a stagflation, and that will be even worse than just having a recession. So that will be very problematic. So look out for it. US CPI expectations are 2.6%. So let's see how that comes out, and then we'll talk about it in the next week. Anyways, core CPI is also expected to come out year over year at 3%. It came out at 3.1% last time. So yeah, I think yeah, that's about it. But yes, then on Friday we have the PPI data, and expectations are that it will come out at 3.3%. Now this is very funny that PPI is expected to come out higher than previous month. So last month PPI had come out at 3.1%. This time it is expected to come out at 3.3%. So let's see how these inflation numbers come up. And these will be important inflation numbers, because if they really confirm that we are in a stagflation, that will be a bit problematic. So definitely look out for these inflation numbers that are going to come out on Thursday and Friday. So let's move on to the market analysis for the next week and see how the markets can perform, especially given that the markets have crashed a lot in this week. Now talking about the market analysis for the next week, if we see Nifty really bearish over here in the weekly chart, just not looking good at all. Now, if you must have remembered in the last episode of the No BS Trading podcast, I had said that Nifty might continue to move up over here and take the stop loss of all of these guys who would have entered in a short position over here. And just look at that, Nifty just took the stop loss, went above this high. Everybody who would have kept a stop loss thinking that will not go above 23,800 just went above that high and then has started to fall down again. So I hope you guys got some sort of an insight on how the market psychology works over here, right? So anyways, Nifty is expected to open 500 points down near 23,000, you can say 22,400 to 500, right, on Monday. Now gift Nifty, if you see over here, it is not showing correctly over here, but like if I go into the 15-minute chart, yes, you can see gift Nifty has closed somewhere near 22,340. So actually even lower over here, but I would say let's assume 22,400 to 500. So this will clearly be a fake breakout, right? Because markets broke out above this trend line, and as I said that markets can give a fake breakout over here above this trend line. So if you see clearly, this is a fake breakout. And tomorrow if you open, not tomorrow, sorry, on Monday, if you open near 22,300 to 400, then very easily if we go below 22,350, you can open a short position on a positional basis over here till the target of where, till the target of 21,400 to 21,300. I think this can be easily achieved. These 1,000 points can be easily achieved over here, because then this will be a fake breakout. So chances are market will go very fast over here till its next good support over here, which is 21,000, you can say 400 to 21,300, because of this wick also over here, and because of this support also over here that you can see in the previous levels over here. But I think what will happen is that markets might take a little bit of rejection, but I think then we can again continue our move on the downside at least till 20,300 to 400 over here. So another 1,000 point fall, but for now let's focus till the target of 21,400 to 300. Now, until unless there is not any sort of good developments in the market, this plan can work pretty well. But if there are any sort of good developments, let's say regarding the tariffs, let's say US is cutting tariff rates again, and because of that markets might rally again over here. So yes, in that case things can be a bit things can go a bit different over here. So definitely if you're taking a positional trade, keep in mind to trail your stop loss tightly, because what happens with fake breakouts like this is that if it is a genuinely if it is genuinely a fake breakout, and if the market wants to go down, the market will not take a lot of time. Keep that in mind. The market will go down very fast over here, so you will not need a very big stop loss, and you will also not need to give the market a lot of space. Okay, so I hope you guys understand that. As of now, not a buying scenario at all, and as I said that we will not think about buying over here. The market is in no mood of going bullish over here, and I hope you guys understand why I said so, right? So talking about bank nifty over here, bank nifty is not that bearish over here, and I'm going to tell you why. Because the impact of tariffs will not be on banks, right? Banks will not be impacted at all by tariffs. It will be companies who are into basically, except for financials and some other things, that is where the impact of tariffs will be the most. And because of that, banks are not down, right? If you see, bank nifty is still standing strong. But I think if nifty continues to move down, if nifty opens down 2%, you will see some pressure coming in banks also, right? So as of now, shorting bank nifty doesn't look like the right option. If you want to take a short position, please take it in nifty only. Don't think about taking a short position in bank nifty as of now, because bank nifty is not that weak over here. So because of that, no point in shorting the strongest guy over here, right? But yes, below 50,800 over here, that is when you can see a little bit of bearishness coming over here till 50,000. So if you are a trader if you are a trader, bank nifty trader over here, first of all, look at where bank nifty is opening on Monday, right? If it is opening near 50,800 and sustaining below it, then you can think about taking a short trade till 50,000. But I think keeping small targets in bank nifty is the best thing to do over here. But what will be more important is what happens below 50,000. I think the real bearishness in bank nifty will come below 50,000. So if we sustain below 50,000, that is when I think we can think about taking aggressive short positions in bank nifty. And I'm going to tell you, first of all, one reason was that, as I said, bank nifty is strong, so no need to short it right now. But the other reason, which is much more important, is that bank nifty, if you see, has made a double bottom type pattern over here and then broken out above it, right? So if we sustain below 50,000, we'll have a proper confirmation that yes, this double bottom pattern has failed over here. Actually, we'll get a confirmation higher, like earlier itself. But the problem is that, as I said, that banks are not banks will not be a lot affected from the tariffs, right? Banks will not be affected a lot. So because of that, I would say wait for a little more confirmation and let bank nifty go below 50,000. If we go below 50,000 and sustain, especially below this support over here, then I think chances are bank nifty can move down 2,000 points back till this support. And I think bank nifty can then also has the potential to go down a little more over here. Let's think about that once that happens, not right now. So I hope you guys understand how the market can move, and that is it for the market analysis for the next week. So yeah guys, that was it for this week, and thank you very much for watching till the end. I hope you guys enjoyed this episode, and I hope you guys understood some new things from this episode, and I hope you guys got some new ways of thinking about the market from this new episode. But yes, I know I have been a little away from making content, but I will definitely be back very soon. And also I have a lot of new things that I want to share with you, some new perspectives, some new developments that have happened in the market. But yeah, thank you very much for the support that I've been recently getting on my content. I cannot be thankful enough, and I am really grateful for it. But yes, yeah, that was it for this week, and I will see you guys in another week in another episode. Bye bye.